Oil prices are closing in on 7 and 8 month lows, but how low will the price go? Well, recent headlines in the oil sector have focused in on comments around from analysts suggesting potentially we could well see $30 a barrel in 2018. Here we are now around about the $43 a barrel level on WTI. Gaurav Sharma is business editor at International Business Times and joins us now. Welcome. Is $30 a barrel a reality check, or is it an extreme view?
I think it's a little bit pessimistic. I would say, could the oil price fall that low? In theory, yes, it can, but will not stay there because a correction mechanism will come into place, and I think production will suffer. So I think where we are, we're likely to see declines. We'll touch about 40, a touch lower, but then the oil price should start stabilizing there.
What is it that we've got here? Is it a demand side issue? I mean, are we seeing demand taken out, or is it excessive supply?
I think it's a shade of both. If you look on the demand side of things, demand isn't exactly firing up, with the notable exception of India. You look at the big four, you look at US, Japan, China and India, only India's demand is firing up. South Korea also, the demand is a little bit low. Now, in the case of China, even if it's a case of flat demand, it'll still keep the market steady in tandem with India's rising demand. So the demand is where it is. People don't expect it to fire up spectacularly next year. The IEA is predicting somewhere between about 1.1 to 1.3. So the demand stays where it is. It's the problem with the supply. Now, OPEC can cut as much as it likes. The US producers just keep pumping on and on and on. And in the time that OPEC first moved to the idea of extending the cuts to when it actually executed those cuts on the 26th of May, the Americans added something like around 500,000 barrels per day of oil in production.
Yeah, if we bring up a chart of WTI, we can see the markdown that we've had recently, and in fact that period here was where we saw that OPEC meeting, and since then there has been this big markdown. Talk a little bit more about who's involved in the markets at these levels, because we're hearing that the US shale producers have relatively high costs, and at this level some, I guess, are beginning to feel the pain. And as you said, the lower the price goes, the more likely it is that they're going to stop, so presumably then it mops up some of this excess supply. Who is in the market at these levels, and can many still make money at $35, $40 a barrel? I
think if OPEC had just kept quiet and just suddenly executed a cut on the 26th of May, Jeremy, we would have seen a very different outcome. The problem here is that in March, the Saudi minister got up on stage at IHS Sarah Week and said the market should not take Saudi support for granted. Immediately, there was an impact on market sentiment. Traders said, well, all right, well, maybe there won't be a cut. And the oil price has not recovered since then. That is a statement of fact. What that did was, in the period that we have between January and March, a number of these US producers, they kept getting the feelers from OPEC that they might extend, they might not extend, they might extend. Piggybacking on that sentiment, quite a few of these guys, even the so-called zombie producers, the guys who don't have the viable plays, extended their hedges out by 12 to 18 months. In many cases, for some of the companies, 12 months. But for those who were sitting on sort of modest plays, it was around 18 months. Now, these are just the so-called zombie companies. Then you factor into account those with viable shale plays, especially in Eagle Ford and Permian basins. These are the guys, and I can personally testify to that, having interviewed some of these guys in Texas, that they can keep going even at $30 a barrel. They can make $1 or $2. It's not the ideal situation. They'd rather not have it, as with the Saudis, doubtless, but they can keep making a profit at 30. Now, you take all of that on an even keel, there is everything out there to suggest that US production will be a lot higher than it is at the moment. The US Department of Energy says it will be around 9.9 million barrels per day next year. But there are folks out here in the city who are saying it'll be somewhere that is 10.2, 10.3, it may be even 10.5. So, and the decline rates will not kick in for a few years if you take the natural rate of decline for shale plays. Now, if the price stays where it is, there's nothing stopping these guys from keep pumping at least for 12 months. And
of course, what they're doing is, if they're making a profit, they're adding to their balance sheet and so forth. But I know that a lot of OPEC producers are finding it tough at these levels in bolstering their country's balance sheets. I mean, thinking of some economies. I know even Saudi Arabia finds it difficult at these levels, despite the fact it keeps on pumping. There must be a problem with some of these producers at these levels not being able to supply sufficient amount of money to their companies or to their country's balance sheets.
I'll come to Saudis a little bit later, but looking at the rest of the 10 out of the 14 plus 1, the 11 out of the 14 who are partaking in it, led by Saudi Arabia. Take out Saudi Arabia with the equation, look at the other 10. I think some of them are in a huge spot of bother. The only thing is that the Gulf producers sticking together, Kuwait, UAE, they're all sending sound bites saying that we should maintain it. The only problem here is that history bears testimony that all these sorts of mini increments that they're after come at the share of market, at a loss of market share. So take that into account, then look at the Saudis. There are reports out there that Saudis will very soon start reducing their exports to the United States. People might find this a bit strange, but in all of this market kerfuffle, the Saudis still have had around 18 to 20% of the US market share, mostly for heavy crude. So now the Saudis talk about reducing their exports to the US, one of their most lucrative partners. And you get a sense of what these guys are trying to do. They're trying to sacrifice market share in a bid that they can make $1 or $2 per barrel. And history bears testimony that that doesn't quite work, that you will always see an era of lower prices if oil producers start doing that. Add to all of that the so-called 10 non-OPEC producers. Well, the Russians, they're doing a little bit of inventory jiggery-pokery. I suspect the Omanis and the Kazakhs are doing the same. Kazakhstan's actually so blatant that they're saying that they're cutting production, but it won't be at those high-value projects, especially the sort of unfortunately named Kashgan.
Mm-hmm. Yeah, you mentioned Saudi. Saudi Arabia, I guess, wants a high oil price because it wants to float part of their massive company, Saudi Aramco, the oil-producing business. Is this likely still to go ahead at these sort of levels of prices, $43?
Well, I'll tell you what, very interesting you bring that up. And this is my personal opinion, that's my publication, but quite a few people out there, myself including, can't quite wait to short that Saudi share once it's out. And for the simple reason that this particular IPO, and the Crown Prince has been quite clear, this is about Saudi Arabia moving away from oil, I beg your pardon. And the way I see it is that this is about solar Arabia. You give a little bit of the equity out there. The primary listing is in the Tadawul, the Saudi exchange, and then the secondary listing, who knows, London, New York. But if the valuation thereafter, it'll probably be Hong Kong. That's what it's looking like, because they don't want the scrutiny. That goes ahead. I don't think it is one of those mother of all IPOs, given the oil price is where it is, and by the time this IPO comes through, could be a lot lower. I think my average prediction, as we've discussed previously, is about $40. Even 40 is not quite firing up the market's imagination. But I think the Saudi strategy, in terms of sticking to the cuts, is purely for the sake of this IPO.
Yeah, I was going to get round to your view on oil prices at the end of the interview. You say $40 a barrel. We spoke earlier, well, I referred to this $30 a barrel in 2018. That $40, are we going to get there this year and stay low for 2018? Or is it going to be what's your expectation?
When we spoke round about OPEC, I think my prediction was that we will start touching a $40 oil price as we approach Christmas. I think it could happen a lot sooner. It could perhaps be imminent over the next 3 to 4 weeks. But I think what will then happen is that a lot of people will pause, especially beyond the US continental shelf. If you look at Brent, we'd probably be around 45, and that is where the trouble starts. Right now, if you look at it, US rigs are up, Canadian rigs are up, and so are the international rigs. What we will start seeing is that if West Texas falls to 40, which is where I think it's heading to, and if Brent falls to around about 45 or lower than 45, the trouble would be more felt in the international markets, where also the rigs are rising. People aren't noticing, but the international rigs are rising. And I think the way I see it is a correction mechanism will come into place, because there's as much the international players can take.
And then 2018 is just a grind around that sort of level, or do you see things picking up again as some of these hedges come out and some of the dynamics change within the market?
I expect some of the sort of zombie company hedges start rolling off around about March 2018. So it'll be very interesting to note what happens then. But I suspect there will be some support for the price. Let's also not forget that some of the inventory levels are where they are, and it'll be interesting to watch where the inventory levels go to.
Yeah, okay, look, it's a pleasure. Thanks indeed for joining us. Gaurav Sharma is business editor at the International Business Times and joins us there with a wide look at the price of oil.